Hello and welcome to the Trading Pit, personal investing tools and techniques for the active trader and investor. Once again, I am Lundy Hill, a lifetime commodity futures veteran. Here are the charts that caught my attention this week, but first, this is not investment advice. I am not a financial advisor, and you can lose money trading. It is the week ending May 2nd, 2025. Here is the NASDAQ weekly chart as a follow-up of a call I made last week. I highlighted the bullish engulfing pattern last week, and that carried through, carrying prices up about 700 points. That was a 3% move this week, which was very nice. From the low of 3 weeks ago, the NASDAQ is up 22%. So I guess that means we are in a new bull market on the NASDAQ. We do have major overhead resistance at the high of the previous pivot top and that bearish engulfing bar. That bar had a great amount of selling to produce that tail top, a break above that high, and I expect a quick rally. Let's go down to the daily chart. Here's the daily chart, which shows the previous pivot high a little bit better. I think maybe, just maybe, prices could react a bit to form the right shoulder. We're forming a very rough head and shoulders bottom, with the lows in March being the left shoulder and then the lows in April being the head. Maybe in the first couple of weeks of May, we pull back to the 19,000 level to form the right shoulder and then break the neckline around 20,000, and then the new trend line the new trend up starts to hopefully carry it to that 22,000 and above level. Next, let's look at the grains and soybeans. Here is a daily bar chart of soybeans. They tried to sell off to start the week. This selling was overpowered with more buyers coming in. And like I highlighted last week, that overhead resistance at about 1073 area, if prices break that, I think soybeans could run. And in my opinion, I think soybeans will break that. The sellers earlier in the week, Tuesday and Wednesday, were met with immediate buyers, sending it almost all the way back up. I think next week will tell the tale of the tape, so to speak. Now let's go to sugar. Last week, sugar had a possible spring off the lows. I said if prices got back down below that 18 level, that prices could really drop. And they did just that, touching and penetrating the 1700 price point. And they did it quickly. They did it in the span of 3 or 4 days, with the last 2 days basically breaking even. So the move went from 1820 down to about the current levels of 1725. Prices did break below that 1700 price point, and sugar touched the lowest levels in almost 4 years this past week. As an early mentor of mine once said, and to paraphrase, multi-year lows is never bullish. So sugar has broken out of a large 3+ years head and shoulders top. If this pattern plays out, sugar could reach, I believe, single digits. So that's a big move. Finally, let's go to gold, everybody's favorite market lately. I don't think now is a good time to buy gold. Gold has done something it's never done in the year 2025. It had back-to-back down weeks. In fact, this past week was just the 4th down week of the entire year so far. That is pretty amazing. In so doing, gold has formed a 3-bar equilibrium down pattern. This is one of my strong, quote-unquote, move-ending patterns. After 5 waves up this year, I expect gold to have 3 waves down to at least the Fibonacci 38% level. That is around $100 lower from these current prices. A 50% retracement of the entire move this year puts gold around $3,050. So I would be trying to buy around between those two levels, 3,050 up to about 3,250. Or actually 3,150, I'm sorry. This has been The Pit. Thanks for watching. Please like and subscribe, and let me know if you find this content helpful. Have a good day.